Good morning and welcome to the Decision Point Trading Room. My name is Erin Swenlin and I'm here with my father, Carl Swenlin from DecisionPoint.com. We have lots of interesting charts to share with you. We'll start off with a market overview. I'll cover the sectors and find some interesting industry groups, and then we'll finish off the show with your symbol requests. If you'd like to join us live, you can go to our homepage on DecisionPoint.com, and you will see the link right there with my picture to the Decision Point Trading Room. Click on that and you can sign up and you will get entry into the trading room live. All right, Q&A box is for your questions and symbol requests, and the chat room is for you to talk amongst yourselves. I do have a moderator in there who will welcome you to the room, and you can see what other people have on their mind as we start this trading week. Okay, Dad, I'm going to turn it to you, and let's get this started with, I know you had something interesting you wanted to share before we got into our market overview.
Yeah, if you invest in limited partnerships, I think that's what we're talking about here. Like USO or UNG, natural gas, crude oil. You need to file a K-1 with your tax return. And here's a site where you can get those K-1s. It's taxpackagesupport.com, and very handy. I found it to be. Next, I want to go into a new feature that we have on Decision Point, and I got a new share to do here.
Yep.
Okay, we in our Decision Point Alert, we have a new table that we put in to summarize a bias assessment for the market index, industry groups, and sectors that we track, and whether they have a bias that's bearish or bullish. The way we arrive at this is whether for the Silver Cross Index, whether the Silver Cross Index is above its 10-day exponential moving average. And for the Golden Cross, which is a long-term bias, it's when the Golden Cross Index is above its 20-day exponential moving average. So I'll show this on a chart, but let's just take a quick look at the table here. You can see this is as of Friday, and we have mostly everything except energy has a bearish bias for the intermediate term. That means that the Silver Cross Index for each of these indexes has crossed down through its 10-day moving average. Got more of a mix over here, but I still think there's more bullish than bearish in terms of bias on the long term. And let's just look at some of this is on energy sector, but you notice that the Silver Cross Index has just crossed down last week through its 10-day moving average. So that shows a bearish bias in that index in terms of its participation. We would expect lower prices in that sector in the intermediate term. Golden Cross Index is still well above its 20-day moving average, and it's right now that's an long-term bullish bias. Now, no matter what the table says, bullish or bearish, you need to look at the chart and verify that what we have, that bias is really relative and relates to what the chart actually looks like. All right, let's take a look at the markets. Okay, beginning with the S&P 500 ETF SPY. Notice last week it broke above this declining tops line briefly that was on Thursday, and it had a big reversal down. On Friday, it got a bounce back towards the line, and we went above the line today. We're still above the line, but just barely. So I think really this horizontal resistance is more relative at this point. And one of the things I've been watching is the volume, S&P 500 total volume, and that's been really light versus versus the 250-day moving average of daily volume, which is the 1 year, basically. So when we had that bounce on Friday, you notice the volume was very slight. It was well below the moving average. All right. Looking at the dollar, it's been trending up. Today it's down slightly. That would mean, that would mean that gold should be up slightly, but it's up quite a bit. It's up over 0.5% today. Notice that gold bottomed out right here and broke out on that would have been Wednesday, and it consolidated Thursday and Friday. It looks now as if it's going to continue higher. We're still showing bearish sentiment in gold, which is a good thing because that's where buyers can sneak in, even when it gets to be in the green again. It should have some distance to go to the upside. Crude oil, well, it was earlier had broken above the top of the falling wedge formation. So basically it's stalled right now on the declining tops line. Treasury bonds, getting somewhat of a bounce, but kind of stalling out today. I was struck by one analyst, and I won't name anybody because you don't name people who buy printed ink by the barrel, but he was estimating what he thought bonds were going to do. I thought based on what bonds have done in the last 40 years, which is go up. Right now, this chart tells us bonds are going to go down, and I keep bringing this one out, but I think it's important to keep that in mind because it's broken a long-term trend line. Now, you're going to have, just like this, we had up legs and we had some down legs, but the overall trend was up. I think right now, the long-term trend is going to be down. We'll get bounces along the way, but it's going to be completely different from what everybody has learned over the last 40 years. NVIDIA. We
did have a question on NVIDIA since you have it here.
Yeah, I did notice that. Okay, NVIDIA, on Thursday when we had the reversal notice, it was up really high and then ended up closing just slightly higher on the low for the day, and it's starting to trend downward. Notice that we have a rising trend line here, and it has really departed a great distance from that line. Its tendency is going to be moving back towards that line, and possibly we could see a reversal and a substantial correction. Again, this stock is advancing on the hopes of AI accomplishments or contributions for the future. We don't know exactly how that's going to pan out. Right now, it's kind of like bubble mania, and it could get back if we have some grounding event in the AI area that could cause prices to correct.
Yeah, the question.
I'm sorry.
One of the questions is that, is it overpriced? And then, of course, the question of what is a good entry?
Good entry was October of last year.
So you're not seeing
no idea. It's absolutely overvalued with a PE of 110. I don't have any idea if that's going to matter. So far, at this point, it doesn't. But I'd say I'd be very careful with this one. Notice the PMO is curling over below the signal line, and that's bearish. So at this point, I think we should look for some correction in these.
At least until about 400, when it's going to start testing that longer term rising bottoms trend line, I'd say.
Right. I think that the big tech and I think the market is going to be correcting through September, possibly through October. They're looking for entry back into the market at that point. So that's what my crystal ball says. Don't know if we should trust it. Okay, let's move to, we have Tesla. Getting a bounce, did not make it all the way down to this rising trend line. Basically, this looks like this was a support area here. Again, I don't have a great outlook for electric vehicles. I think they've had their run. Doesn't mean they're going to go away, but I don't see a great future for them in the next decade. It's just too many things to overcome. Now, we had a comment last week. Somebody says they have an electric vehicle and they love it. And that's great because some people, it's going to suit their lifestyle. And I always thought it would be great to have one to run around town in. But I don't think as an industry it's going to do great things. That's just my opinion, and take it for what it's worth. Apple has really been correcting since the beginning of this month, and getting a little bit of a bounce here after this extreme low. But the PMO is not looking too healthy. And again, I think this group is going to be correcting downward for a month or two. Amazon is back to its rising trend line. Tried to break through on Friday. It's back above that rising trend line, but very close to this line of resistance. Google, we still got this island situation to resolve. It doesn't mean it's going to resolve downward, but that is kind of what I would expect, again, in terms of what the general market is doing, or what I expect it to do. Meta platforms broke down through the rising trend lines. It's been a very orderly rising trend. Right now, is caught on this level of support. It may continue sideways or it may go some lower. Microsoft, We have the saucer with handle. The handle could proceed down lower to this level. I mean, that would be, at this point, I think I'd be thinking of abandoning the idea that we have a bullish situation. Netflix head and shoulders pattern. I'm not sure if we could consider it a wipeout at this point. It did execute and it's got back above the neckline. So I still think it's a valid formation, and I would look for it to go lower. And we're back to NVIDIA. So, what I forgot to do was before I go to that, we have, this is our monthly chart. It's not final, but notice that the PMO, the monthly PMO, was rising for about a month or so. And it looks to me like it is right at this point in time. It looks like it has turned down below the signal line, which is very bearish, but it's not final till the close on Thursday this week. So keep an eye on that. And of course, even if it doesn't close down for August, we might get it. It might start down again in September. So we'll be watching that. This is not a good thing for it to be happening. And what I had forgotten to do was as I usually do, Bitcoin. And we've got the rising wedge formation, broke down from that, and it's moving sideways. In a big picture, you can see where all the major lines of support and resistance are, and here's the rising wedge formation that is broken down. We found support at this level, so keep watching that. But again, I think this is probably going to go lower. I looked us up on the weekend, and remember that President Roosevelt confiscated gold in 1933. And I looked it up. I wanted to know exactly what took place. It was the Gold Confiscation Act of 1933 was an executive order by President Roosevelt that required all Americans to turn in their gold coins, bullion, and certificates to the Federal Reserve. The order was issued as a response to the Great Depression and aimed to stop gold hoarding and increase money supply. The gold government paid $20.67 per ounce of gold, which was well below market value. Now, that's the important issue, the element here. It was an executive order. He did it all by himself. No Congress involved. So I would keep this in mind as I'm accumulating gold and deciding how much of percentage of my portfolio it ought to be. If I look at what's going on in the world and in this country, I want to put 80% of my holdings in gold, but that would not work out well if they come out with another confiscation act, which could easily happen. So keep that in mind. And on that happy note, I will let you take it back.
All right. Did you look at gold miners? I hate to throw you back into the fire there, but
no problem. Gold miners.
I mean, with the new bullish look of gold, what do you see here?
We've got a falling wedge formation, which is it's not really acute, but it's definitely a falling wedge. So that tells me it's going to go higher. And I'm seeing the same kind of pattern here in the last few days. Let me put a thumbnail on this. Notice we got the gap up on Wednesday. Consolidation is moving higher. So if gold keeps going, I definitely say that the miners are headed higher as well.
All right. My turn.
The gold Silver Cross index, the Gold Cross index, Silver Cross is almost at zero. So it's got a lot of way to expand upward. And the Gold Cross is only at about, it's at 43. So that's not too bad on a long-term basis. It's in bearish territory, but it's still not flat.
All right.
And with that, I will turn it back to you.
Okay. All right, it's time for our look at the sectors, and we'll pop on through a few industry groups as well, because there are a few sectors looking interesting right now as I went through the charts this morning. So here is our candle glance, and it lists all of the sectors all on one page. And what I would draw your attention to are the price momentum oscillator, the PMO, which is this window right here. This is going to measure the momentum within the sectors. And what I've been noticing is that for some time, it's been negative momentum pretty much across the board, with the exception of energy. But energy also began to fail, and its PMO had started lower. The question was, well, where are we going to look for some action? Where is there some positive, outlook? Not a whole lot of places. But if we watch that PMO, there are a few interesting places. Materials really is catching my eye this morning with the nice big move upward. It's got a nice base here right on the 200-day EMA. It is broken its declining trend. So we'll want to look at that chart a little more closely. Real estate was starting to show some rising momentum as well. It's looking pretty good today. Technology has flattened out its PMO, but as far as I know, we'll go and look at that chart, but I believe it's still in decline. The utility sector has been one that I've been telling my subscribers to keep an eye on, because we have hit some major support, and it does look like it wants to turn around. In fact, the PMO is looking like it's turning up right now. So overall, I would say you've got two defensive sectors that are kind of leading the market right now, at least as far as what's looking bullish with rising momentum. I'm not saying that the others are bad. There's certainly some deceleration going on in a few of these sectors, but these are the most interesting to me. Materials is not really a defensive sector, but it's not really an aggressive, growthy type sector either, like technology. But we'll take a close look at technology because that PMO is flattening. And then we'll look at the two defensive sectors, real estate and utilities, with a little drop into materials as well to see what's going on there. All right, so this is comm services. All I'm going to point out here is the declining Silver Cross Index and declining trends in participation. I don't really see a whole lot of improvement under the surface here. Stochastics have turned down. Consumer discretionary, also Silver Cross in decline, no increase in participation. Consumer staples. This, of course, is a defensive area of the market. I would have expected to see it get a little bit of love on this decline that we saw, but really all it did was kind of put the brakes on at this support level, but it's not looking like it wants to do much. You can see participation, while it stopped bleeding off, it was really almost near zero. So it's not like it could go much further down. And it's been staying in that territory for a little while. So I'm not a fan of consumer staples at this point.
Erin,
energy.
I want to make a point. The stocks greater than 20 EMA and 50 and 200, when they get to the very top or the very bottom, it doesn't mean that deterioration doesn't continue. It's just that we can't detect it anymore. When it's down to zero, it could be still continuing to get worse. So there's not any support at those levels, or no resistance at 100.
Right.
Support at zero. So.
Yeah, I mean, it's really, you could look at it as somewhat, overbought versus oversold. But, really it's giving you kind of that temperature of what's going on. And notice with energy is a great example. It got to the top, couldn't really go much further, but it stayed up there. You can have these kind of overbought conditions, if you will. They can continue if you're in a nice bull market run, which energy has been in. But this is what we want to watch for, is when you start to really lose that kind of participation starting in the shorter term. And that's what we're seeing with energy. I don't like today's candle. It's I've got an OHLC bar here, but you can tell there would be a very long wick on that particular candle. That's a shooting star kind of a look. And so energy is looking kind of, oil is starting to make a little bit of a move, and I think that will help energy out. But right now it's looking really toppy. Financials look like they want to bottom here, so that's good news. Actually starting to see a little bit of improvement here under the surface on stocks above their 20-day EMA. Stochastics turning up. So I didn't point out financials because the PMO is still declining, and it looks like it'll drop below the zero line today. So not a place that I'm necessarily looking for a lot of upside movement, but certainly possible at this point. Healthcare, kind of in a sideways move. We formed this very bearish double top, and it has managed to avoid confirming that double top with a drop beneath the confirmation line, which would be drawn across the middle of this M. And we don't really have that confirmation yet. It's still in effect, but it just doesn't look quite as bearish as it did before. But you can see that nothing under the surface is suggesting that we're going to get a good rally here. The Silver Cross Index has put on the brakes, but if you notice, there's not really much in the way of improvement under the surface. But I will say that my PMO scans, my diamond scans that I run, have been coming forth with a lot of healthcare related stocks. So I don't think it's down for the count necessarily, but I think that you're going to have to be very picky if you're going to be in that sector. Industrials put on the brakes here as far as price. PMO does look like it's flattening here. That wasn't really obvious when we were looking at the candle glance. And we are seeing a little bit of expansion and participation here under the surface. Not anything that meaningful, but certainly something to consider. Stochastics also now rising again as they have left the territory below 20 and are headed upward. I hesitate. I don't like to call stochastics overbought and oversold, because you actually want them to stay above 80 and you don't want them to stay below 20. That's very, very weak if you're having stochastics below 20, and things are very strong internally if they're above 80. So don't really think of those as overbought and oversold, but these are rising out of that weak below 20 territory. So that's not too bad here for industrials. Here's materials, the one that caught my eye. And unfortunately, under the surface, we're not seeing the kind of action I would want to see. So I saw the PMO was starting to flatten, starting to turn up, but notice Silver Cross Index is still in decline. We are seeing a nice little bounce today, but we're going to need to see some better participation under the surface before we jump in here. This probably is due to the metals are starting to look a bit more bullish right now. And that is probably what's going on. But materials are made up of more than just the metals. There's chemicals in there, among other things. And clearly those aren't really doing as much as we would like to see them. But we do have flattened participation here of stocks above their 20, and stochastics are rising. But I have to say, looking under the hood here, I'm not quite as impressed with materials as I was on that candle glance. Real estate had a dark cross back here. That's why we've got the big circle in there. I like what's going on with real estate. We have a nice V type of a bottom right here coming off of this support level. PMO is turned up now. The RSI is still in negative territory, so there's still work to do. And certainly there's a lot of overhead resistance with the 20 and 50-day EMAs and that level at 3750. So real estate looking better, but has a lot of work to do. And under the surface, getting a little bit of improvement here under the surface as far as participation goes. Not great, but not terrible. And stochastics are rising. Real estate still is one to keep your eye on. What's going on with technology? Because we have bottomed at this point, but we broke that rising bottoms trend line. I thought we were really going to be in for some big decline, but it was time for a bit of a relief rally and a pause, and that's what we're seeing. The PMO is not really responding to this move upward, likely because we had that huge decline on Thursday that really took things out. The Silver Cross Index has turned up, and we are seeing some action here as far as participation under the surface. But overall, nothing overly exciting. And notice the stochastics, which had been rising, have topped now. So that tells me that, this is a little bit, we're getting a bit of a rally here, but I don't know that we want to trust this to go on for too much longer. And utilities. This is why I was talking to my subscribers about it, is notice how strong this level of support is. And it is down to that level. It has started to move back up. The PMO is starting to rise. This is really a slow going. And utilities, not that exciting as far as a group to be investing in. But, if this is where the strength is, this is where the strength is. Silver Cross Index is only at 10%, but it has flattened, and we are seeing a tiny bit of a heartbeat here. This has basically been a flat line here on participation, and we're finally starting to see just a little bit of action here with almost about a quarter of the sector above their 20-day EMAs. So this isn't, if I were looking at all these sector charts and we were looking at kind of the normal, regular, what we normally see, some of them moving up as far as PMOs, some of them moving down. If I were in kind of the normal situation, if you will, the bull market configuration, I would not be looking at utilities here on this chart and be rah-rah about them. This is not a great chart by any stretch of the imagination, but all things considered, and with this bearish move to the downside that the market has been experiencing and will likely continue to experience when this relief rally, this pause in the decline is over, this might be one that could stick around. But I'm not saying that this is like a completely bullish chart that we need to just roll right into utilities. I'm just saying that this is one of those beat down areas that does look like it's coming out of the this very strong support. So I have to say I like that. And we are getting a little bit of a heartbeat, which is more than we could say for the last month. So that's pretty much what's going on with the sectors. Let's go ahead and dive into some of these industry groups and see what we can see. And I'll start with utilities just because that's the one I just gave you the biggest discussion on. And we can look at the different industry groups and look at their chart and see what we can see. So gas distribution, we are hitting a low. It has started to rally, but we're not seeing that much out of the PMO just yet. Stochastics rising though, so not a terrible look, but not anything overly bullish. Same thing goes for multi-utilities, again, at very strong support and trying to bounce. Stochastics rising. Conventional electricity really does look interesting to me right now. The PMO has turned up. We do have a pretty solid bottom here. I wish I could see the rest of the support back here, and I probably will pull up a bigger chart for you. In fact, let's just do that. You can press this little button from the industry summary. It'll get you the chart. So we do have support back here. But it did drop below this major support, but it looks like it's starting to make that turn right there. And then the PMO, like I said, starting to turn up and stochastics rising. So pretty interesting, looking interesting there in conventional electricity. And water, I think, looking pretty good right now with that move to the upside. You can see the PMO is turned up, stochastics are rising. So water looking pretty good as far as an industry group goes. Technology, I'm not going to be fishing in here, but I will. Let's look at where strength does lie, because there's obviously some internal strength here that we're catching with the stochastics rising. I don't see it necessarily in electronic equipment, although we are seeing that PMO turning upward. Computer hardware, similar situation, PMO turning upward, but we do have some strong overhead resistance here. Telecom actually has been in a nice rising trend. If you're going to be in technology or have been in technology, I hope it was in this industry group. Still looking pretty good as it moves up on its rising trend. Computer services really starting to make a move here. I like that look. PMO nearing a crossover buy signal, and stochastics almost back above 80. So computer services looking interesting in technology. Also electrical components and equipment making a really nice move to the upside there. I like that look. Semiconductors, PMO is trying to top beneath the signal line, and this does look like a very toppy, kind of rounded top formation here. I would be careful with the semiconductors. Software trying to make a move, not nearly as exciting as some of those other industry groups. Stochastics starting to fade just a little bit. And renewable energy, boy, this one used to be the talk of the town, and now it's just a volatile mess. I'm not real interested in renewable energy, although it has hit some interesting support here. A little too volatile for my taste, and it's in a sector that I'm not completely enamored of. All right, real estate was one of the other areas that looked interesting. Diversified REITs making a move with a rising PMO. I like the look of that. Real estate holdings, nice reversal going on. PMO getting ready to turn back up, stochastics rising. Real estate services, still in a declining trend here, but trying to make its way above the 20 and 50-day EMAs. PMO is ticking upward. No good look here on hotel and lodging REITs. Industrial and office REITs kind of in a sideways trading zone. Stochastics rising, but I don't see a whole lot of upside potential here. Mortgage REITs making a nice turn and breaking through a declining tops trend line. PMO has turned up, could get above the zero line soon. So mortgage REITs looking interesting.
Erin?
Yes.
You should probably move on to symbols.
Symbol requests. Yeah, looks like we're getting low on time. Thank you for that. And did we have any questions?
No, I don't think there's anything we have to address right away.
All right. Well, thank you for reeling me in. I tend to do that. So it's a good thing I have somebody here to keep me on track.
Start out with BGR.
Yep, that's what I see in the Q&A. All right, so this is Energy and Resources Trust, BlackRock. Hitting overhead resistance right now, and the PMO looks a little suspect. Yes, it is turned up right now in this rally, so I think we could maybe eke out a little more upside. But this is, I would worry about this area of overhead resistance. Stochastic staying in positive territory. I don't see any reason why I would get rid of this one if I owned it. But I just can't get too excited for it on a buy just because overhead resistance is so darn close. Let me just see what that would be if it does get up there. Yeah, just to get to this point is only about 2.3% away. So I think your upside potential is a little bit limited, so that I wouldn't be a fan.
Okay. ACMR.
Semiconductors, as I said, when I looked at it, we need to be careful with semiconductors. This one looks okay. Looks like a possible flag formation, but today is trading on a big bearish engulfing candlestick. And that tells me that we should get another day of decline out of this one. PMO is still rising, so I would keep this one. I still see this one as a hold, but as a buy on this pullback, I suppose it could be interesting. But I know the group as a whole, semiconductors, are looking somewhat weak. So I don't know that I'd want to be buying into this on the pullback. Certainly you could, but it's not looking at relative strength starting to peel off a little bit here. Can't get overly excited on the buy side.
Okay, take a look at Tesla. We covered it, but I didn't answer this question. What is support and resistance test for Tesla stop level?
Okay, so here's our support level at about 211. It looks like. We were talking about the viability of EV and et cetera. But in the really short term, I'm looking at this as a reverse flag. That means that we could very well get another decline and then another flag kind of situation. That's a bit worrisome. It hasn't gotten above the 20 and 50. If you own this, the stop level, I would be searching to get below that level of support. But boy, that's at 11.4%. So let's go up to the 200-day EMA. That's closer at about 6.6%. So the 200 EMA is currently reading at 222.85. So I would be looking at setting my stop below that level. Getting in, not with this reverse flag formation, maybe on a breakout above the 20 and 50 and a PMO that's actually rising. That would make this one interesting.
Okay, SQQQ.
This is the ultra pro, ultra short of the QQQ. Everybody knows I've been very bearish on technology. I still am fairly bearish, although it looks right now like we're getting a pause in that decline. So I turned my inverse off. You could certainly keep your inverse on at this point, but we're in a pause. We're in a possible relief rally going on. So I think it would be a good short to go, have an inverse in your portfolio. I don't think that that's a bad idea, but I don't know that I'd want to go leveraged on it at this point because we are in this pause, possible relief rally situation. And that would really leave me hanging out there with a leveraged one. But I think inverses in general are a pretty good idea as a hedge if you want to be hedged. And I would be going to somewhere like a reverse on technology or inverse on the NASDAQ or the QQQ, as you can see here. I still think it's a good hedge, but right now I have my hedges turned off. Hopefully that's helpful.
Okay, about DBA. We're getting double symbol requests, and we only handle one symbol.
Right. Now, if you want all of your symbols looked at, that's when you need to become a DecisionPoint Diamond subscriber, because I do a Friday trading room. It's an hour and a half, and I look at every single symbol that you will bring in. I almost always have time, and you can bring in multiple symbols, but we don't have time here. All right, nice reversal. I like the PMO turning up with the crossover. See, is it crossing over? Not quite yet, but getting ready to. This is a chart where I could see getting involved. I know that it's the agricultural fund, so I know that potential is kind of limited to the upside, but 2.8% gain wouldn't be too bad here. Let's see a weekly chart real quick. And let me put a zoom thumbnail on here, but it looks fairly safe. Yeah, PMO trying to bottom above the signal line right now, and RSI in positive territory. Let's look at a quick 5-minute chart. 5-minute buy. This is for our buy points and our sell points. The buy point comes in with a PMO crossover, a 5-minute PMO crossover with a positive 5-minute RSI. So currently we're not at a buy point. Notice the PMO has been moving downward though, and price hasn't really done anything, really lost much ground. That tells me there's internal strength here. So you may not get a much better buy point than where we're at right now, but I would watch for that PMO. If it starts to make that turn upward, that would probably be your best buy point coming in.
Okay. Can you talk about to see how overall money is flowing out of equity? Specifically for cash flow, I'm not sure I have anything for that, but using the Golden Cross, Silver Cross indexes, when they're moving down, that's money going out. I mean, I think that's a very good indicator for that kind of thing.
This is kind of a side one too that we use, which is the RIDEX assets ratio. And it does give us a total total assets in their bull and sector funds. It's closed as far as the universe of these funds go. And you can see certainly we are getting that move out of those bull and sector funds. And we are seeing an increase in those bearish funds here and the bear assets, and even a little bit here on money markets. So people are starting to get more bearish. It took some time, and maybe that's why we're seeing a little bit of a relief rally here, is because we do have a lot of bearish participants out there.
Okay. KISS.
All right.
Gene Simmons.
Right. Is that one? Let's see. Kisses from Italy. I think that he was saying, thank you for the bias assessment.
Oh.
Okay. I think we just got blown a kiss. And would it make sense to add bond indicators? The thing with the Golden Silver Cross Index is that you need to have a collection. And you can't just have one on bonds. I mean, I suppose you could have a collection of the bonds, whether they're on silver crosses or golden crosses, but I don't know how useful that would be.
No, you have to have an index that includes a certain number of securities. I mean, it just has to be a group that you're evaluating. So, and the idea is that's the reading on the Golden Cross Index or the Silver Cross Index is the percentage of that group that has an upside crossover. Okay. MKS.
Broadline retailers. Let's see. This is really low volume. Maybe is that the right one? Marks and Spencer. That's got to be it. How about this one? That's London. We'll look at this, but I normally wouldn't look at something with this low a volume. You've got a PMO on the sell signal, pull back to support, and it does look like it wants to rally at that point. So that makes this interesting. Stochastics trying to turn up, but haven't. This would be my real big issue here, is it's in a group that's losing relative strength against the S&P. It itself is losing strength against the S&P. I don't think that this is something I'd want to be in. If I were in it, I could see holding it just because it's held this area of support, and your stop level, well, that's probably your best one at 7.3% below this level of support, but you could certainly tighten it up to this level of support at these tops at about 2.5%.
Okay, MUX.
All right, gold miners. Whoa, big, nice move today on gold miners. Admittedly, I haven't trusted this rally. We've been fooled a lot on these gold miner rallies, But with gold looking better, I think it has a better shot of moving higher. And this chart does look very healthy. Got a PMO buy signal just came in, stochastics rising, and look at this one compared to its group, to the gold miners. It's got rising relative strength to the group. So I like that look, and RSI positive. This one looks pretty good. It looks like a flag formation. The only problem is, of course, getting in right now on a 6.6% gain. I hate to do that when that happens, but it does look like a strong chart. I would still think you might get a little bit of a pullback today. The PMO is starting to turn down a little bit, but price action is really, really positive. Getting more volatile, though. Notice this is a rising, and then this rising one that's kind of a bugle shape. That means you're going to get a lot of volatility. So you might be able to jump in at a little bit better price point than you're at now. But ultimately, I think you're going to be waiting a while before you can wait for that pullback, at least today. Maybe tomorrow there'll be some profit taking.
Okay, IONQ.
Pretty mediocre chart, honestly. The stochastics are turning down in negative territory, and that PMO, it's flattened, but it's not really giving me, this declining trend is still mostly intact, I would say. And the relative strength isn't doing it for me here. I don't know if you see anything on this chart, Dad, but I don't see anything here that excites me enough to get in. The 50-day EMA is a good support level. I think you could hold this. And your stop level, this one's really volatile. This is low priced. Yeah, I'd be really careful with this one. You can't even set the stop very well because it's so volatile in the swings back and forth. I'd be really careful with this one. It's not my cup of tea. SMCI, there we go. Not a lot going on this chart either. You've got the PMO in decline. Stochastics are already trying to top way down here in negative territory. Its performance isn't terrible. It's been performing in line with the S&P, but that hasn't meant anything good because the S&P has been in decline. I don't know. I feel bad. These charts are coming in, and I'm really lukewarm on a lot of these charts. Kind of V-bottom-ish. I can't get excited about this one. It's below its 20 and 50-day EMAs. If you owned it, I could see holding it, and that's the level I'd want, but that's an 11.3% stop. So another one that's really volatile, guys. I'd be very careful with these when I can't set the stop easily. I mean, the stop level I would want would be in the trading range of the day before. I don't like that setup myself. So I'm not a real fan of this chart. I apologize, but it failed at this overhead resistance. The PMO is not rising. So.
Okay, MKS.L.
All right, so that's the one that you wanted to look at. And so the similar look, PMO is getting ready to have a sell signal though here. So I can see the interest on the pullback, but those are filled red candlesticks all the way down. Those are bearish candlesticks, and we didn't even get a break from them. Getting a little bit of a rally today, but I don't think I'd trust this one with that PMO sell signal. All right.
BA.
Look at us getting all the way through these.
Right. There.
All right. So Boeing, aerospace was looking kind of interesting to me. I'll admit, I saw a couple of aerospace charts come through on my scans. And you can see the declining trend here. It is trying to make a move upward, but declining trend still intact, RSI negative, PMO still in decline. Not a lot here on this chart. Support was broken. It has re-entered upward. I just can't get excited about this one for a buy. If you owned it, I'd say I would still hold it. And my level of support would be down in here. I think the best one would be down there, but that's, well, 6.5% is doable. So if you did get involved, make sure you set that stop. But I'm just not seeing anything that exciting here. And I imagine a weekly chart's, not looking that great either. Yeah, I think you're really vulnerable to this trading range here that I think you're going to end up back in it. So I'd be really careful here.
I think we should mention that next week we will not be here because it's Labor Day.
Yes. And I will take you quickly to our website as everybody tunes out. We do have two reports that we do. The DecisionPoint Alert, it's going to do pretty much what my dad did at the beginning of the program, give you complete assessment of what's going on in the market. We look at Bitcoin, we look at gold and the dollar and yields and crude oil, among others. And you'll get that in the DP Alert. DP Diamonds, this is where you get your stock picks, sort of like the end of the program where we did the symbol requests. You'll get a trading room on Fridays. It's an hour and a half, as I mentioned earlier, where you will get your symbol requests looked at. If you're a trading room person, I think that the price of diamonds is completely reasonable to get those 4 hour and a half trading rooms in. I'll give you 10 stocks picks per week with diamonds, and I have ETF days. So of those 10 picks, 3 of them will be ETFs every week. So something to consider. We're getting ready to launch a new service. We'll talk about it a little bit more, but I keep talking about my scans and what comes up in them. We're going to start a scan alert system where you get to look at all of those results from the scans, and you get to decide what you want to invest in from those scan results. I will give you my best bets on those results in diamonds, but the scan service will be giving you all of the raw information. So keep an eye out for that. We are running a buy one, get one free special currently. So if you go in before August 31st, which is coming up, if you go in before Thursday, you can get a free month of DecisionPoint Diamonds or the alert, whichever one you decide to subscribe to. You will get that extra month added onto that subscription. All right, that pretty much covers it. We hit the 10 a.m. mark, and I want to thank you all for being here with us in the DecisionPoint Trading Room. And we will not be back next week. We will come back in 2 weeks. So until then, good luck and good trading.